Hey everyone, welcome to my YouTube channel. For those who don't know, my name is Kashif Sheikh, and on my channel I focus on the markets. I provide my thoughts and insights on the stock market and really try to focus on sharing opportunities to build wealth. Obviously, one of the main things that has really impacted the markets over the last year is the COVID-19 pandemic. Some industries have thrived, particularly the technology and communication sectors, with stay-at-home stocks like Zoom, Peloton, and Wafer surging, to name a few. But now we are at another paradigm shift, with a multitude of vaccines and treatments that have been released and are ramping up production. This video will focus on the economic recovery as the global economy reopens and the investing opportunities that reopening will provide. With some level of certainty, we can say that the world is starting to return to normal. Maybe not the same normal that we had pre-pandemic, but similar enough that we can still find huge opportunities in companies that will benefit from reopening. Obviously, the COVID-19 pandemic has dragged on for more than a year now and has impacted most businesses in one way or another. When researching this topic, I came across a ton of opportunities, so the recovery-focused segment will have a few more episodes. This will probably be a 2 to 3 part series on my channel. The effects of COVID-19 have been so widespread that there is a ton of opportunity linked with the reopening of the economy. It has created far more investing opportunity than people realize. This video will focus on the opportunities in the travel sector, specifically online travel platforms, airline, and cruise line sectors. And the next few videos will focus on sports, entertainment, apparel, high-quality businesses, and more, all of which will benefit from the recovery. They will also have even more of my thoughts on the economic recovery and how I'm taking advantage of it. There's a lot of excitement around investing in the travel sector. Because as things reopen, everyone wants to go on vacation and explore the world after the pandemic ends. Now more than ever, people are desperate to travel, so there's just a pent-up demand that will benefit companies in the travel sector. Let's start with the more platform-focused travel companies. A few of these platform-like travel companies are Booking Holdings, Expedia, TripAdvisor, and AirBnB. Booking Holdings provides several travel-related services, including online reservations for vacation packages, hotel, airline, and cruise bookings. They also provide online price comparison services, which allows people to compare travel itineraries while obtaining the best possible price. You may know a few of their subsidiaries, such as Booking.com, Rentalcars.com, Kayak, and they also own the online booking platform for restaurant reservations, OpenTable. Booking Holdings is really a bunch of synergistic businesses or operating companies under one umbrella holding company. Expedia is also another online travel platform business. They help with travel shopping for consumer and small business travel and own travel fair aggregators and travel search engines. You guys probably know of Hotels.com, Travelocity, Cheap Tickets, Expedia Cruise, and Trivago. They also provide corporate travel management for businesses through the Expedia, Partner Solutions, and Ingencia brands. TripAdvisor is another online travel company that runs branded websites in 48 markets in the world in the hotels and media segment, as well as the experience and dining segment. The company also manages travel brands that provide comprehensive travel planning and trip-taking resources, and they provide information and services for booking restaurants in travel destinations and vacation and short-term rental properties like villas, cottages, and cabins. AirBnB is one that I'm sure all of you guys are probably familiar with and know of and use when traveling. It operates a platform for vacation rentals and connects hosts and guests online to book spaces and experiences. Like all travel-related businesses, these companies were really hit hard with the pandemic in 2020, but have since recovered their losses and are trading higher than their pre-pandemic levels. Because they were platform-focused businesses, they were a bit less risky than cruise lines and airline companies, which were more in trouble due to their greater overhead costs. So that's why I focus on investing. I plan to further allocate a percentage to both Booking Holdings and Expedia, although I do prefer Booking Holdings to Expedia as it's a higher quality business and has a few different travel verticals and is more diversified. I like Airbnb a lot as well, just not at these prices, and will look to accumulate shares over the next several years when I can buy at better buying points for myself and my strategy. Another travel subsector to look at is the airline sector. These companies were absolutely hammered at the start of the pandemic. Airlines will obviously be huge beneficiaries of the reopening as businesses and vacation travel picks up in a post-pandemic world. There are a number of airlines that I looked at, including Spirit Airlines, Air Canada, Delta Airlines, American Airlines, and United Airlines. In 2020, I invested in Air Canada, American Airlines, Delta, and United Airlines, with my biggest allocation in Air Canada. I am very impressed by Air Canada's restructuring of their business model and their plans to diversify into cargo and e-commerce. From when Air Canada started their cargo operations in March of 2020, AC's cargo revenue is up 53% year over year. And by the end of next year, the airline plans to have 7 freighters in operation. Air Canada has become a much leaner and diversified business operation in 2021 by selling off their fleet, laying off employees, and with their new cargo division proving to be the company's most profitable segment for 2020. Air Canada is also positioned to play a major role in the continued distribution of the COVID-19 vaccine shipments for Canadians. These major catalysts, excluding the transit deal, which is still up in the air, if that deal was to go through, Air Canada would totally dominate in the local and international air travel associated with Canada, along with the general optimism of the reopening of the economy, in my opinion, will prove beneficial for Air Canada's bottom line and their stock price. Looking at United and Delta Airlines, both respectively are still down significantly from pre-pandemic levels and are behind Southwest in their recovery, as they derive more of their revenue from international markets. The US has reached a higher level of vaccinations per capita, so Southwest has benefited as they are more domestic focused and domestic travel is further ahead in the recovery cycle because of the higher level of vaccination versus the rest of the world. That's why I see more opportunity in United Airlines and Delta Airlines, but they do carry a higher level of risk and they remain relatively small positions in my portfolio. Now on to my favorite opportunity in the airline adjacent sector, Boeing. Boeing is a company in the industrial sector that is involved in the manufacturing of commercial and military aircraft and defense, space, and security systems. They should really benefit as travel demand returns and airlines are in a position to order new planes. They also provide support services including engineering, maintenance, spare parts, and pilot and maintenance training systems to the airline customers. I am very excited about Boeing, and I do think it will do very well, as it is still at an early stage in their recovery cycle. There are also further potential tailwinds as the 737 MAX issues are solved. Overall, I think it's at an earlier phase in the recovery cycle than the airline and online travel platform companies. Another exciting opportunity in the travel sector, where I still feel we are at an early phase of the recovery cycle, is Carnival, Norwegian Cruise Line Holdings, and Royal Caribbean Cruises. They remain stuck at port at the moment, with cruises currently on hold. They do remain hopeful, however, that with a max vaccine rollout, they will be operational towards the end of 2021. They are still at a very early stage of the recovery cycle, which is why I like them. I do favor Carnival, but I own positions in all 3. The reason why I liked Carnival the most was because of their stronger balance sheet, and I continue to like Carnival. I plan to remain invested in the cruise lines until at least for the next year or so, until their operations really ramp up again. I think they will benefit tremendously from reopening and the economic recovery. Guys, please keep in mind that I bought the vast majority of my positions last year. I have been following the COVID-19 vaccines and treatments very closely over the last year. This meant that I was really able to position myself to take advantage of the bounce in travel stocks prior to the news of Pfizer's successful phase 3 trial in November. So I have a relatively low cost basis for a lot of the securities I mentioned. With all that being said, I still think there's a lot of opportunity to make money in the travel and travel adjacent sectors. If you're patient, certain travel names have potential to really be great trades. There will be lots of volatility in this sector, and the sector will continue to move with COVID-19 headlines and related news. However, volatility and risk aren't the same thing. I love volatility because volatility for me is opportunity. However, do think about your own risk tolerance, as investing carries inherent risk and these stocks even more so. If you like any of the mentioned ideas, I would suggest buying in stages. Don't buy all at once, average in. That's what I would always do, and it helps me keep my sanity. Also keep in mind recovery stocks and travel stocks specifically only make up a portion of my portfolio. I think they can be a great trade for the next year or so, but overall I still prefer the high quality, innovative companies that make up a very significant portion of my portfolio. Another thing to note, the companies I mentioned are just a few businesses that I found interesting. There are lots more out there. Do your own research. Make sure to do your due diligence. This video isn't meant to be investing advice. It's for informational and educational purposes only. Tune in next week for even more on the economic recovery and the subsectors that may benefit from it. Thanks for watching, guys. If you guys enjoyed the video, please feel free to like, subscribe to my channel, and ring the bell for notifications. And until then, stay safe and we'll see you guys soon.